Cheryl, I want to go to you here. Do you have picks, or do you choose to be the investment committee's chairwoman today and critique these guys' picks? What do you like or not like?
I am not a big fan of financial stocks right now, but I live in Silicon Valley, so I tend to gravitate towards more technology stocks, and my picks would be primarily in that area. I think that the growth is outsized in that area over finance. And for me, finance is just a little bit too boring. Work for a financial company, so I have to be careful there. I love Microsoft. They just announced yesterday. They had a great earnings announcement, but you look at them, they have a 69% margin on their Azure business and a lot of growth ahead. And they've quietly crept up to the #1 market cap in the world. Satya has led the company since 2014 to just all-time highs and has changed from a hardware company to a cloud computing company. And I think there's still a lot of upside growth for Microsoft. So I still love that name. You might think the P ratio is high at 30, but if you look at the space at 55.1 average, they're still relatively valued. So I like Microsoft. If I was to pick a financial, I do like BlackRock. They are the largest money manager in the world. So if I had to go on the financial side, I'd stick with BlackRock. And look at their dividend, over 2.5%. It's better than a 30-year Treasury. So I'd rather own BlackRock. If I want to have a more boring name in my portfolio, I'd rather own something that has a great dividend like that I think is very stable.
Right.
And then I like cybersecurity. We look at the spending in that space really doubling in the next 5 years. There's more growth in that space than probably any other space when we think about technology, because it's
Those
not...
projections, though, have been in place for a long time, and the stocks haven't necessarily followed.
The stocks in general are expensive. There's not a lot of cheap stocks out there in that space. Palo Alto Networks, I would argue, is very expensive. I own the stock, but it's expensive. I've almost got called away on it a couple times this year, and I wish I had, to be fair. DXC Technology is one that's fairly cheap. So if I was looking in that space, that's one I might consider. I don't own it yet, but it's one I've been watching for a while. It's trading about half where it was a year ago, and at a valuation that's reasonable. P ratios, less than 10.
Right.
So.
And Roku's your last one.
And Roku.
Yeah.
Roku's had such a run. I bought Roku at 20, bought more at 40. I actually had sold puts, so I got assigned the puts over December, and I was sweating. Super happy right now at 108, 109. So that's worked out really well. I would be okay if I sold Roku. I do have calls sold on Roku at 120 right now. I'd be happy if I got called away, but I think they're an acquisition target. And Roku is not considered a competition to companies like Netflix. They're considered a partner, and the advertising space has room to grow. The company has room to grow, and I think they're going to get picked up.